Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day, and before we get started, as usual, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is a Wall Street veteran who has served as a portfolio manager for 4 hedge funds and made hundreds of high-profile media appearances to discuss investing, including Fox News, CNBC, The Wall Street Journal, and so many more. He is currently the founder of Peter Grandich and Company. We're going to be discussing whether commodities are an asset class that could protect investors in an economic storm. It's none other than Peter Grandich. Honored to have you back on the show.
Be glad to be with you, Jesse, and none of those media people come close to you, my friend.
Oh, thank you very much. You know, I'm sure you're aware, there's an amazing compilation on YouTube of all of your past media appearances to discuss investing. I was watching that the other day. Very impressive, very fascinating. I recommend people check that out to see Peter Grandich back in the day giving his predictions. Fascinating, truly. Now, I want to start this
Yes, I just have to
conversation.
tell you one thing.
Yeah.
I was truly a legend in my own mind back in those days. So I don't watch that because I remember what I thought. In fact, let me just say is when the market went wrong, it wasn't me that was wrong. It was the market. But I've subsequently learned through a large sum of loss of money that that's not true. So
Well, great. Lesson learned. And hopefully we can all learn through your wisdom as well. Now, everybody was predicting a crash in the broad market and a recession in 2023. And now we're hearing even louder calls that, well, this time, definitely here in 2024, it's going to happen. Is there any scenario in your mind where a so-called soft landing could occur? We've had Janet Yellen recently come out and proclaim everything's good, guys. We've achieved the soft landing. The economy is really strong. How do you see things playing out here in 2024 when it comes to the U.S. economy specifically?
well, the very fact that she said that actually is one of the reasons to believe there's going to be a recession. I mean, her and Kramer, I don't know who's more wrong in making predictions, but I was in a camp of 2024, and I still am. This morning, as you and I speak, we had our CPI number here in the U.S., and I posted on my Twitter that the Goldilocks scenario is officially dead. Uh, it is there is this group, Jesse, and this is very important to my philosophy in investing. There is a group on Wall Street. It's very large. I coined them the "Don't Worry, Be Happy" crowd, but they basically always see the cup half full. And there is also a group, and they exist in the commodity arena where they've always seen the cup half empty. Uh, the problem is the markets are followed mostly by financial media that are tied to the hips of those "Don't worry, be happy" people. I think the economy is in and not anywhere near the shape that the Goldilocks scenario would paint. Uh, Real quick, first of all, we're seeing now that the labor numbers just can't be counted on. When you see it in almost an entire year ratcheted down by almost 500,000 shares, I like to say, and I'm not the only one that says this, they shouldn't call it the BLS, they should just call it the BS. Uh, and remember, the Fed is supposedly making their decisions based on those statistics. I think the other thing that's quite concerning is, and I think we saw it this morning, is inflation may not be rip roaring as it was just a few months ago, but to consider it dead and to see that 1 or 2% inflation is coming back with 1 or 2% interest rates, I think is a very bad choice of decision. And so I think once that starts to filter in as 2024 becomes more and more involved with a political environment taking hold and really starting to drive market thoughts, I think that Goldilocks scenario is going to be tossed just like transitory used to be stated by the Fed and will never be stated again in their lifetime.
Yeah, I mean, the gaslighting by both politicians and central bankers about the true state of the economy is pretty alarming. It's like some George Orwell stuff, war is peace, you know, that they're basically telling us everything's fine. But when you look under the hood, even anybody with a modicum of sense can see that things are not as they are telling us. Now, I'm wondering if you could tell us what you see when it comes to the current setup for the commodity space, just broadly as a complex to start off with. And I'd like to get into some specific commodities with you. Do you think they could provide a shelter from this coming economic storm? We hear a lot about the coming commodity super cycle, about how the Magnificent Seven and tech stocks are massively overvalued, and that we're going to see a rotation into real assets. Obviously, gold hitting all-time highs last year, uranium doing very well. I'd like to touch on those later. But I'm wondering, commodities as a whole, is this an asset class you think you want to be in here in 2024?
There's a cross current, and I think the two biggest opposing powers to be is one is there's no question that the economies worldwide is not strong. China is not doing anywhere near that it used to be an important player in the commodities. The U.S., as you and I just discussed, is not as strong as they like it to believe, and therefore you would normally say, okay, caution to needs to be invoked when it comes to commodities because there's typical cycles and economic cycles. Then on the other hand is we have a real dramatic amount of shortages if you believe even half the expectations of where economies are going over the next 5, 10, or 20 years, including a uniqueness of this electrification, which may be having a hiccup. It may not get there as fast and as far as people thought, but still going to play a major role. So there's kind of a court in between. I think we'll fall somewhere in the middle, Jesse. I think certain metals will do well. I think the metals themselves will continue to outperform the underlying shares because of the simple fact that it is much difficult more now, in my opinion, for a junior resource company to operate than it was 20 or 30 years ago. So I think the physical metals will continue to outperform shares until such time certain levels are reached. And I know you want to talk about Pacific, but just throwing out gold needs to get through 2100. Copper needs to get back through 450. If those things happen, then those shares that are in that industry should all have a good time. Most of them anyway, should rise most boats.
And yeah, I was going to bring up gold next because hitting all-time nominal highs last year created a lot of excitement, a lot of buzz. Came back down where it continues to hover just above $2,000, but a lot of people pointing out that that has now become a support level for the gold price, whereas before it was resistance, and that we have a very bullish setup for the metal. Obviously, geopolitical chaos around the world, central banks hoarding gold. There's a lot that seems to be working in gold's favor from a fundamental perspective, but the mining shares are what many people think extremely undervalued compared to the metal itself, especially if you get into the junior mining sector. So are we set up here for a bull run in gold? And maybe you could expand on your thoughts about you said 2100 once gold reaches that level, you could see then the mining shares catching up. So give us your thoughts there as well.
Sure. Well, you made a very good point. I think we need to start there, and that is a nominal high. Really, to adjust for inflation, it's still a few $100s higher from here. And I think that's an important part for people that say that gold is fully priced. Listen, I have to set these parameters because I operate within them. They're not long, but it's very important. First of all, gold is treated like kryptonite by the financial service industry, at least in the US, maybe to a lesser extent in Canada. More financial advisors are tuned to having it part of a portfolio. But in the US, it might as well be kryptonite. The second thing that to understand is it's probably the most hated investment by the latest fad in investing, and that's cryptocurrencies, or I call it Bitcoin, even though its real name is Bitcoin. It's a cult, and that cult believes that somehow if they destroy gold, it somehow benefits them, and they can't live in the same universe, whatever. But if you look at its actual performance, first of all, from 2 years ago, when I decided at the end of 2021 that I was not going to have exposure to general equities that weren't related to natural resources, to this right now, gold has still outperformed the stock market. But the biggest story, and this blows my mind, and if we asked 100 financial advisors, pick them anywhere in the US right now and said, hey, listen, since the new millennium started, what has done better, the stock market or gold? 98 or 99 would say stock market, no questions out. When in fact, gold has outperformed even the stock market for almost 25 years. And yet you wouldn't know that based on the typical opinions about it. And of course, now those of us like me who used to say, and those that are still around from the days that I spoke can remember because they said it too. We used to say this saying, which is no longer true, Jesse. We used to say at a show, mining shares are just like owning gold. We learned last year that is not the case, that there is a dramatic difference at times. And my portfolio can demonstrate that to you if you need to see proof. But the bottom line is, eventually the mining companies are going to be called upon to find these metals that the world claims we still need. And it's a totally different environment for them right now. Where they can go in the world is much different than 20 or 30 years ago. What happens once they're there? Political changes, social unrest, uh, all sorts of things that make it really much tougher now to want to be an explorer and a miner in many parts of the world. But that's also going to play a role into the continuing supply, demand outstripping supply. So long-winded answer, but I still think that we are on just the cusp of this bull market. I don't think it's going to be rip-roaring, but I do think that once gold gets a 2100 print and stays there for more than a day and not overnight over a Sunday, I think momentum players and a whole, even the financial media will be kicking and screaming, having to comment on it. And that's going to change the makeup. And that's when the mining shares and the juniors and all are likely to have a much better day than they're currently having.
This episode is sponsored by Masterworks.com, the only platform giving you the exclusive opportunity to invest in blue-chip contemporary art. Institutions like Citi and Goldman Sachs agree art has a near-zero correlation to traditional equities, meaning it enjoys less volatility in relation to equities than other markets. It's outpaced the S&P 500 by 136% over the last 27 years. And Masterworks' internal research has shown that portfolios with just a 5% allocation to art outperform traditional 60-40 portfolios 98% of the time. With Masterworks, you don't have to be an art expert or have millions of dollars to invest in some of the greatest artists of all time, like Banksy, Basquiat, and Picasso. Their team of data geniuses use decades worth of art auction records to find paintings with the best potential to appreciate. And then, their acquisitions team negotiates to buy those paintings. Next, Masterworks files an offering with the SEC, breaking the art into shares so you don't need to invest for the full price of the multi-million-dollar piece. Masterworks also takes care of buying, selling, storing, and insuring the art, selling it at an opportune time. Since inception, every single one of Masterworks' exits have shown appreciation, so it's not surprising over 881,000 people are on board, and there is a wait list. But Masterworks is now offering Commodity Culture subscribers the chance to skip the waitlist and get started with Masterworks today by using our affiliate link in the description below. Last time we talked, you mentioned that when it came to physical precious metals, you thought gold was a better place to be in, and just based on price action alone, you've been proven right so far. But that being said, sentiment in the silver space is at rock bottom. Everybody's throwing in the towel. The fact that I just mentioned silver means there's going to be several angry comments below this video or this podcast where people are proclaiming that silver is completely useless. It doesn't do anything. It's too manipulated to even be involved in. So I'm wondering if this is an opportunity right now for contrarians, in your view, when it comes to silver.
Well, I would probably say it's probably the most contrarian opportunity since I've watched it. And why I say that is, for a lot of years, I too got the negative comments because especially when I spoke at the shows around the world, probably metals, because I used to say silver was really a second-class citizen to gold, and that it didn't have the same fundamentals that gold did, and of course that irritated the silver bulls. But it has changed a lot for the better. There's a lot more fundamental needs for silver. Its story's a lot better than it was. The problem, as always, is retail investors, particularly, they like quantity over quality. Give them the same amount of money. They would rather have 10,000 shares of a dollar stock than 1,000 shares of a $10 stock. And that's what the difference many times between gold and silver is. I personally think, as you just said, it's a contrarian's dream. I don't think there's any short-term nirvana coming for it, but I do think relative to what other things people buy in, the Bitcoins, the stock market in general, I would be much feeling safer in putting my head on the pillow tonight knowing I own silver than those things.
And any thoughts on the silver mining space? Obviously, pure play silver miners are much rarer than pure play gold miners. But if the gold mining sector, particularly the juniors, has a very low sentiment at the moment, the silver mining space is even lower than that. Do you think we could see an opportunity there in the silver miners? And you mentioned you thought gold would need to hit 2100 before the stocks caught up. What are your thoughts for maybe where the silver price needs to get to for the miners to also perform?
Yeah, so the stage would be this, and just because we hope something happens doesn't mean it's going to work out. But we need to get through 2100 in gold. That sets gold into a I don't want to say a rocket type stage, but it's certainly an acceleration stage. That will then spin right immediately into silver. It wouldn't be long before silver starts to partake. And once the metals themselves are going above those levels, those shares are going to go. Probably for silver, it's probably $30. It's probably a number that if we had a print and stayed there with a three in it, I think the shares can go real well. But you made a very interesting point. There's not a lot of pure silver plays. So if you want to be a so-called silver bug or emphasize it, the leverage would be in them if and when silver has that rise. I still think gold's going to lead silver at this point in time, but there will come a point, and that'll be probably in the latter stage of the move, where silver can actually outperform gold for a period of time.
Let's talk about uranium because it had a heck of a year. Big story in 2023. Spot price currently sitting at 15-year highs. Many stocks have had quite a run. Do you think caution might be warranted here? Perhaps we're a little bit overbought and due for a correction. Or do you think the uranium bull market is just getting started?
Well, as bad as it was in general juniors for me last year, it was another great year because of getting involved with uranium when it was literally under $20. And at that time, and basically through this run up till now, my suggestion was it's going to be better to be in the major producers and the companies that actually buy the physical bullion until we get to $100. Now, mind you, talking about $100 uranium price when it was 20, 30, or even 40 still seemed crazy. As you and I speak, we're just a few dollars away from it. I think the fundamentals just keep getting better and better for the uranium nuclear story. It's not a story that's going away. It's not a story that's overbought, so to speak. The people, in fact, have been upset that the juniors themselves, the small explorers, have not performed as well as the uranium price or a Cameco and all. My feeling was once we get to 100 and stay above that, that's going to light up that junior segment. I've not owned them other than one. And if and when I'm right and we get above 100, I may look at them. But I do think the uranium story, if you ask me, of all the metals, if we said over the next 3 to 5 years, what's the likely one that will still be strong after that period of time? It'll be uranium first and then gold second. The uranium story, it just gets better and better. And there's no sign of overheating. There's no sign of, I haven't gotten a cab yet. I'm going to get a haircut. I doubt my barber's going to tell me about some uranium stock. Maybe when those times come, and they eventually will, but I still think it's got a long way to go, Jesse.
Yeah, and I think we also live in an echo chamber. I hang out on uranium Twitter quite a bit where everybody's talking about it. But if you do pull back and take a look, I believe it did get discussed a little bit on some mainstream media, but it's nowhere near the mania phase at this point, I think.
Let me just add that it was interesting just the other day. CNBC, which I call Tout TV, I only watch it if I need a laugh, but one of their lead analysts featured Cameco, which I thought was interesting. That I don't expect them to be featuring a 50-cent uranium stock ever. Maybe at the tail end of everything, they might let somebody on like that. But the very fact that that's now mainstream now, that the least significance, the Sprott going to the New York Stock Exchange to trade, that's needed if you want to believe in the junior market. The legitimacy of the big fellas, your big guns, need to be accepted before you can expect anybody to run to the little folks. And that's a good sign that we're prepping for that next stage of the uranium play, which will involve the juniors more than they have up until now.
Yeah, I completely agree with you there. I want to shift to copper because the price has been proven to be very volatile on the metal itself. We've seen several reports last year that there's these massive projected supply shortfalls, particularly in the face of the new green economy, electrification of the world. What do you think here? Do you think these demand shortfalls are actually going to come to pass? And I wonder if we remove the new green economy from the equation completely and just pretend that none of this electrification is happening, is there still a reason to be bullish at this point in time?
You know, you're the first person that said that, and that's a tremendous thought to have because I believe you're onto something. I believe if it was totally removed, we would not have the same bullish opinions. Even though the supply and demand scenario is better now during this rather weak economic period in the world than it normally is. There's not an oversupply of it and all. But you're absolutely correct. If you're going to be a believer like I am, that copper will see $5 or something more, you have to believe that the electrification is going to play some role. Now, I don't think that role is as big as everybody thought and as quick as everybody thought, but it is a key factor. So here on one hand, for copper, we have it as an economic indicator, the Dr. Copper. We've heard that for years. It's true. China is not strong at all. There's really no place in the world that's lighting the world on fire. And so you would say, oh, maybe this is not the best time to look at copper. But there's not an oversupply. And interesting enough, despite this somewhat malaise economically speaking, we're seeing the supply that was supposed to be oversupply in 2024 has now been eaten away, that there is now looking for a deficit even in 2024. So I think you have to give it the cup is half full attitude. It had reasons to go a lot lower. It hasn't. And if it hasn't, that just means that it's probably building up for the next move forward. And I think a lot of that will also come as the BRIC nations take hold. That's a story in itself. And people start to see that the United States is not the doer of everything and the leader of everything. And as those economies start to show strength, so I think I would say this: copper's 375. I certainly believe it'd be 475 without ever seeing 275. So I think it's more upside than downside, but maybe not as fast and maybe not as high up as once we might have thought a year or so ago when the electrification story seemed like a can't miss story. There's some question marks in that now, and deservingly so.
I want to talk about energy here, the oil and gas space, mostly for my own benefit because I'm very overweight oil and gas stocks to the point where sometimes I lose a little bit of sleep at night. Now, there's sentiment. This is another commodity that's hated and where sentiment is very low. There's talk of greater than expected oil production coming out of the Permian Basin, weakening consumer demand if we bring in this hard landing scenario and the fact that a recession could be on the horizon, new supplies coming online, and a number of other bearish headlines. I'm wondering, I think that over the long run, if maybe investors are willing to endure some pain in the short term, the fundamentals overall appear bullish to me. I believe the price of oil will be higher in 3-5 years by potentially a significant amount than where it is right now. So I'm wondering how you see the energy space performing here in 2024 and beyond as well.
For your ability to sleep a little bit better than you may be sleeping now, always remember it's better to be a year too early than a day too late. There's no question that the worst case scenario is you're early in a cycle. You know, when it was up at 100 and something dollars and natural gas was going through and, shares would double or maybe even triple the price that they are now, certainly more people were interested, but actually that was the worst time to be. So if anything, you're just too early, but you're going to be a whole lot better and live a lot longer, Jesse, if you're too early than too late in your investment criteria. Trust me, after 40 years of knowing that. I think the oil industry has made a decision, depending on who may be in charge. This administration that we had here absolutely vilified them from day one. They took away all their means of pipelines, exploring and all. And then when the prices went up, everything was because of the oil companies. And then, of course, they tried to make a switch and Biden went over, and this really changed world economics went over and made a fool of himself in Saudi Arabia. And that's when the Saudis realized that, you know what? The days of us just being with the U.S. and only trading the dollars has to be over. And that was a dramatic change. They've already said that they're willing to trade outside of it. We have one Middle East country that's already said it's not even going to trade in dollars anymore when it comes to oil. I would say that an accumulation period now through 2024, and if oil goes lower during this, the Saudis have just cut prices. Uh, like I said, slowing down looks more to be the case. You always have that Middle East factor. If something all of a sudden there's a disturbance of delivering, but I think in accumulating starting now and use declining prices to add to your positions. I think, like you said, if there's still people that invest, Jesse, for 3 to 5 years, I have to tell you, when I started and you talked about being a hedge fund manager, and I remember when I managed a mutual fund, we had to put out 3 to 5 year projections. No one talks 3 to 5 years anymore. The longest may be 12 months. So you're in a good spot as a young man to be focusing on 3 to 5 years versus 3 to 5 days or 3 to 5 months, which much of this market has come. And if you're in that camp, I think you'll end up okay in the oil and gas sector.
Great. And I have been buying on weakness, so that's good to hear legends such as yourself
Now, the
confirm
legend's in his own
confirm my
mind.
thesis.
I'm not a legend. A legend is my own mind. But after 40 years, there's some things I have a little bit more of a potential educated guess to take than someone that only may be doing it for a couple of years. And maybe just quickly add that. That's one of the big negatives of why I'm bearish on general equities. The lack of experience now. The average financial advisor in the U.S. has only been in the business since the last financial crisis. They have no understanding of a lot of things that you and I just talked about, let alone experiencing down markets or markets that don't go up double digit every year. That's going to play also a role in the negativity that I see going forward. So stick to your guns and recognize, like you said, eventually there has to be value and you have to buy it before the crowd does.
I wasn't going to ask this, but it suddenly popped into my mind to maybe try to get some insight into how you evaluate companies in the resource space. Obviously, it depends on the commodity, whether it's a gold or silver mining stock or whether it's uranium miner, et cetera. But are there any general things that you look for that you feel are very important before you make a final investment decision in a company? And are there any red flags as well that turn you away?
Sure. So I learned it again, uh, even after almost 40 years doing this. When it comes to mining, particularly on the junior side, the overwhelming factor that's going to whether make that company successful or not is management. It's not even the metal that they're at or where they may be, it's management. And I've seen the difference. And when you are an up and coming explorer or one that's maybe going into development and all, it's the way you enhance shareholder value is getting more people to recognize what you're working on and convince them it can only get better. And that's how your stock price goes up. And why that's also important, especially in the Explorer game, these are forever fundraising companies. They're forever raising money because they have to keep raising money to explore and so forth. So you want to be able to have the best possible price and the least amount of dilution. So management, bar none. Now, for me, I've done two things now. I'm down the stretch. Okay. I see the finish line for myself, Jesse. You're just in the back stretch. You got a long way to go, my friend. But wherever we are in that, I do think that we have to understand that we are in a very small sector. It's not like technology or retail where there's hundreds of players, thousands of analysts. We're in this very small area where even today, it's a couple of dozen people that you'll see on most talk shows or whatever talking about resource and so forth and so on. And of course, there's clicks. There's, kind of people follow. I've concluded for myself that I would never be, and I knew this a long time ago, but clearly now for the rest of my natural life investing, I'm never going to be the smartest, the second smartest, or anywhere near the smartest. But if I can identify someone that is, try to ride their coattail. And in the resource industry, a couple of years ago, I believe I found that person, a man named Michael Gentili, a portfolio manager in Canada, probably sits on, I don't know, a half dozen boards, invests all over. And so that and my belief that, as I discussed earlier, of how difficult it's going to be to explore in certain places of the world, I shrunk my window to North America. I'm just not going to chance, even though it may look really ideal somewhere in West Africa or South America, I'm really going to be restrictive. So for me, those combinations are very, very important now. But management is the absolute uh, factor. And if they can't promote, and everybody thinks promote's a bad word, promote is a necessity. It's like any other business. If you had a car company, you don't just sit there wait for people to come in. You run commercials, you go out, you tell people stories about your car. The ability to market and get investor interest is critical, and they have to demonstrate they have those skills. I've seen the difference on the guys that can and the guys that can't. And women, please, because there's a lot of women involved too. I don't want to sound like a
Don't worry, you won't get into trouble here. My viewership's like 98% male, so there you go. But I think that's a very good point about the marketing and promotion side of things, because a lot of the CEOs of some of these mining companies, they don't really get the social media side of things. They don't really get the internet marketing side of things, and now that's become so important. And you can see those companies that really get it, especially ones with really good social media channels where they're taking you behind the scenes, they're showing videos from on site. People love that sort of stuff, and I think not enough companies do it. And yeah, you're right. You could have the most amazing project in the world, and if people don't know about it, nothing's going to happen to the share price.
Jesse, let me just add on this because I think it's very important. I talked about a dramatic change in the junior market. There's a wonderful show going to take place in a couple of weeks in Vancouver. It's probably now the best, especially if you're interested in the junior segment of the market, the Cambridge show. I know you've worked with them and all, and I'm not saying it for that. I'm saying it because of a fact of life. I used to MC it for 25 years. And what's really critical is 20 years ago, if there were 5,000 people at the show, which they're talking about, at least 1,000 were financial advisors or what we call stockbrokers back then. And they had a book of business that involved buying and selling junior resource stocks. So if they fell in love with Acme Resources, 100 to 300 or 400 of their clients fell in love with it because they recommended it and they bought it. That's gone. That's a dinosaur. There still may be a handful of those people and all. So that junior company, that CEO, who used to be able to get one person, get 300 to 400 shareholders, now has to find a way to get to that end user directly because that intermediary that used to be involved, same thing institutional. Well, social media is the only way you're going to do it. You're certainly not going to dial for dollars or the old guys that used to, get a phone and call up and that and all. So having an ability to market through social media, as well as doing the hard stuff, road shows and that nature, is an absolute must. And I've seen that with a company that has a phenomenal project, but considers marketing and all an afterthought. And then I have another company where the CEO is just phenomenal marketer. And it's really critical. And I think that's almost as important as management itself being top notch.
Well, last time we spoke, you also had a lot to say about what you see as an inevitable debt crisis. JP Morgan recently coming out and warning that the US national debt of 34 trillion is a boiling frog situation. We saw the debt ceiling extension until 2025, basically giving politicians in America carte blanche to spend. Where is this all headed? It seems to keep getting worse. The can gets kicked down the road. What is the inevitable outcome, and how close could we be to going over the precipice here?
In my New Year's podcast, I've told longtime clients, friends, and those that still wish to follow that we're now in the realm of where the pain from what you speak about, that and some other situations I'll say in a moment, is now within most people's lifespan. It's not something off in the distance. It's not too far down the road. I think it's a matter of 3 to 5 years, especially at the rate that we're growing. Let's first take the debt issue. It's hard for somebody that when he first started, when we had less than $1 trillion in total national debt, to now talk about something that's not only 34 trillion in national debt, but in just the last year, we incurred 2 trillion extra. 2 trillion. Budget deficits now in multi-trillion dollar budget deficits. The Congressional Budget Office, one of the last bastions of something that's still somewhat bipartisan in Washington, stated in early 2023 an alarming report that said we see the debt going to 50 trillion in less than 10 years. Well, now they're starting to say in less than 7 years because of how much more the debt is growing. How do we pay this interest, Jesse? Forget about paying back the 34 trillion. Revenues will grow. There's no question. We did a little over 5 trillion in tax revenue last year, the highest ever as the United States. But the interest expense is just outstripping that revenue growth. So let's just say that they're right. And even it's 10 years from now, it's not 7. And we have interest rates at 4 or 5%. We're going to have $2.5 trillion in interest expense. So even if revenues grow 10% a year, which they don't, but if they did, we're going to still see interest expense becoming a bigger portion of what we have left. And our single biggest asset that the United States has on its books, financial advisors don't answer this correctly. It's another one that you can get them wrong on. You ask them what the biggest asset is. It's student loans. And now we have a movement with student loan people saying, I'm just not paying. Do whatever you got to do. And that's a double whammy. So when they don't pay, an asset that is no longer an asset has to be made up for. So now taxes have to be raised by the people that are still doing their job and paying their fair share of taxes. So the debt issue is a real thing. And the people that say to you, oh, I've heard that for 20 years. You're right. 20 years ago, it was off in the distance. It was way out there. Now it's right in front of us. Throw in a retirement crisis. 65% of Americans are working paycheck to paycheck. They're never going to live that lifestyle that the financial commercials they're going to see on TV today are going to say. Throw in now an invasion. That's all you can call it. It's an immigration invasion. I'm not blaming those people. Hey, if I was off in a country a couple thousand miles away and I can take my family with just everything we have in our back and get to a place where I'm going to end up much better off than staying where I was, of course I'm going to head there. Especially when I hear from people that are there telling me and confirming it's true. So I don't even know if a wall works anymore. But now we have an issue where it's gotten extreme. Now, because we have so many here, it's now impacting Americans' everyday lives. We just had in New York where school had to be shut and the kids sent home so immigrants can stay there. Excuse me. Of course, parents came out and protest, but now it's going to impact everyday life. So debt, retirement crisis, the BRIC scenario where America is being removed off as the top dog in the world, and the immigration crisis are all something combined that are just setting us up for a very tough period. My personal opinion is this, and I don't sell anything that benefits from this, but I believe in 3 to 5 years, what we'll face socially, economically, and politically will make the Great Depression look like a walk in the park. And almost no one in America, in the U.S., I can't speak for Canada or anywhere else, Jesse, is prepared for it or gives it a serious thought. And I just think it's something that if it isn't at least a plan B, if it's not plan A in your life, if it's not plan B, in a few years' time, you're going to be regretting that it was.
Yes, certainly fascinating times. We live in a lot of shifts going on all around the world. Well, thank you so much, Peter, for joining us today. For those who want to hear more from you, tell us about Peter Grandich and Company, your blog, and your YouTube channel. I really recommend people check that out. You're actually a fantastic interviewer. I've been interviewed by you. I saw your interview with Daniela Cambone as well as David Lynn, and you're a natural. So, and you do a lot of that on your channel as well. So tell us about that and Peter Grandich and Company.
Well, that's most kind of you, Jesse. And I have to tell you, I enjoy immensely speaking with you. Not that I'm trying to set up for my next speaking engagement with you, but it's enjoyable. I do appreciate that. Yeah, I pretty well, Twitter has become my main way of communicating my thoughts. The second is the YouTube. And I appreciate that, interviewing, but I still rather be on this side than your side. And of course, I do have a blog, Peter Grandich and Company, separate from having some companies be blog sponsors that support my livelihood in this way. I don't have to charge for what I do. I also still am part of a alternative to traditional financial planning group in the U.S. If they're U.S. citizens, we focus on believe cash flow is the key to success, not chasing net worth. And that's really what's left of my life as I'm about to celebrate 40 years in and around the financial arena.
Great. Well, I'll put links to all of that in the description below for people who want to check it out. Thank you once again, Peter, for coming on and sharing your knowledge with the audience.
Thank you, and just hopefully continuing success for you, Jesse. You're a very nice young man to speak to. You have a good head on your shoulders. You are correct. You can be as good as the interviewee as the interviewer, and I wish you nothing but success. God bless.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.